everyone, I'm Rebecca McLaughlin-Duane, and this week we have an exclusive interview with the CEO of the Dubai Islamic Economy Development Centre. Now, Dubai has big ambitions to become a global hub for the Islamic economy. We'll find out if they're on track and see what the competition looks like.
If there wasn't any competition, I don't think Dubai would have, achieved where we are.
Later in the show, we'll find out how fintech companies or financial technology firms in London have the potential to disrupt the Islamic finance sector. But first, let's put Islamic banking in the Middle East under the microscope to discover when it began, where it's growing the fastest, and what kind of return you could expect to see on your investment. Salim Essaid has more.
Islamic banking is arguably as old as the religion itself. And in the past 50 years, it's reached new levels of maturity. The banking system that follows Islamic guidelines, including the sharing of profit instead of charging interest on loans, is forecast to be worth $3 trillion by 2021, with countries including Malaysia, Saudi Arabia, and the UAE leading the market. Despite being one of the fastest growing banking sectors, Islamic finance is relatively small compared to the global industry, estimated to have less than a 1% share, according to Emirates NBD Bank. The Islamic banking industry, which saw double-digit growth annually until 2014, has seen the pace of things slow a little in recent years. One way to encourage new players to enter the market and boost investor confidence in Sharia-compliant financial products would be to introduce industry-wide regulations, say some experts.
If you allow individual institutions to go by their own book of rules, you will have a hodgepodge. And it would be very difficult to clean up that mess. Sooner or later, you will find more standardization, development of new and innovative products.
In the meantime, given that Islamic banking is offered in more than 60 countries, the IMF will roll out regulations and guidelines by early next year for the growing industry. Some analysts believe that responsible Islamic banking is easily done through investing in sukuk, or Islamic bonds, which prohibits the generation of money from money. Anita Yadav of Emirates NBD says that sukuk, which currently make up less than 1% of the world's bond market, provide less volatility than conventional bonds and often give a higher return.
Emerging market US dollar bonds, year-to-date return has actually been a loss of 3.8%. Whereas if we consolidate all emerging market sukuk, the return on them has been a loss of only 2.09%. So it's less loss.
The bank forecasts that investor appetite for corporate and sovereign Islamic bonds will remain strong, and more issuances will be seen in the next 6 to 12 months.
Also, when corporates are doing well, they tend to have need for investment and more need for funding. That may see more sukuk issuance. So we are expecting that maybe 2018, Islamic finance will grow somewhere between 5 to a very high single digit.
And with record high levels of issuances seen in the Arabian Gulf region in 2017, whether that $70 billion figure can be topped this year remains to be seen.
An initiative called Dubai Capital of Islamic Economy was established in the UAE 5 years ago. Since then, its development and the contribution of key Islamic sectors to Dubai's GDP has been very closely monitored. The growth and development of the Islamic economy is a key pillar in Dubai's post-oil economic vision. The Emirate has its sights set on becoming a global hub for the Islamic economy by boosting what it calls responsible investment in the industry, as well as halal entrepreneurship and innovation. And the pickings could be rich, with spending in the Islamic economy, food and lifestyle sector alone forecast to reach $3 trillion by 2022. Other sectors expected to be key growth drivers for Dubai are Islamic finance, halal travel, modest fashion, and even halal media and pharmaceuticals. Leading the charge on the Emirates' initiatives to harness their potential is the Dubai Islamic Economy Development Centre. Its CEO, Abdullah Al-Awar, sat down with Inspire to explain the challenges and the opportunities that lay ahead. Your Excellency, a very warm welcome to Inspire Middle East.
Thank you. It's good to be here.
Let me start by asking you, what are the priorities of the centre this year? The vision is there, the ambition is there, but are you on track?
We have already launched a series of initiatives, 36 to be very specific. For example, the listings of Islamic bonds or sukuk. When the initiative was launched back in 2013, Dubai was ranked third globally in terms of the leading markets to attract listings. Today, Dubai is number one.
But there is competition out there with other countries and cities wanting to be that hub for the Islamic economy, not least Malaysia and even London. So isn't consolidation a smarter idea?
If there wasn't any competition, I don't think Dubai would have achieved where we are. With respect to other centers for the Islamic economy, I do believe Dubai has an advantage, and it's in the middle of a very dense economical region. I'm not referring only to the GCC or the Middle East. I'm referring to around 42 countries, including the Middle East, North Africa, South Asia.
In 2016, it was recorded that the Islamic economy contributed around 8.3% to Dubai's GDP. What are the latest figures and what are the forecasts for next year?
We didn't even measure all of the sectors yet, but from three key ones like the Islamic finance, the halal industry, and trade with regards to halal products. That contributes only 8.3%. So if we include the other sectors, which we will in the next year's studies, that figure itself, I'm sure, will be higher than 8.3%.
How important are Muslim millennials to this overall strategy?
Quite important. We are actually enabling those millennials and entrepreneurs and the various SMEs to contribute to the economy by their ideas, the technologies. This is why some of our initiatives are actually directly geared towards them. We have the fintech, sector, for example. Our efforts in supporting an accelerator that attracts these young entrepreneurs and provides them an ideal platform for them to suggest technologies, and we link them to the community, whether it's the Islamic finance community or the broader Islamic economy community.
Of that investment community that you speak of, who are they? Are they exclusively Muslims?
Consumers globally in 2016 have spent over $2 trillion on products that are considered Sharia compliant. And that expenditure came from Muslims as well as non-Muslims. Similarly, Islamic bonds, usually are raised or issued by institutions as well as governments to raise financing for projects. A lot of the Islamic bonds were issued by non-Muslim, governments as well.
Abdullah, it's been a pleasure to speak with you. Thank you for your time.
The pleasure was mine.
According to a Standard & Poor's report, the global Islamic finance industry is set to encounter relatively slow growth over the next couple of years. Fintech, however, could provide growth opportunities. Damon Embling travelled to London to meet tech innovators shaking up the industry.
London's long been a global financial centre. Now it's embracing new technologies to seal its place as a leading fintech hub, disrupting the Islamic finance sector, fertilising new startups, spawning new Sharia-compliant products in what is a rapidly growing sector. 27-year-old Zishan Upal runs one of those startups. His company, Yielders, is shaking up the property investment market in the UK through Sharia-based crowdfunding.
There is a seismic shift at the moment away from traditional finance, especially with the millennials growing up and not needing traditional finance or not feeling the impact as previous generations could have. The disruption of fintech has really allowed for people in the UK to be involved in real estate, as well as the Sharia element of what we do. The retail element of Islamic finance and Sharia finance in particular has been left behind, and that's really an element of the market that we're addressing.
It's people like 22-year-old Joseph who are not interested in traditional banks, constantly craving new technology.
Actually, I like to do it all online, I guess, yeah. It's better to do, I don't like going to banks and things like that. I actually do it on my phone, so it's much easier.
Islamic finance is lifeblood of UK infrastructure, funding iconic projects like London's Shard skyscraper. Britain was the first Western nation to issue a sovereign sukuk bond. The UK Treasury is behind the Islamic fintech revolution. It recognises its potential. But industry experts say Britain still has work to do if it's to keep up with its Middle East competitors.
The fintech sector is predominantly built on three main pillars: capital, talent and regulation. And where we are strong in the UK is on talent and regulation. We've been underweight on capital for a long time, and that's slowly changing. And that's predominantly changing the conventional fintech sector because banks are starting to participate and support fintech businesses that are growing and partner with them and fund them. In the Islamic sector, banks are really yet to really catch on to the opportunity, although that's beginning to start. That was our aspiration in setting up the UK Islamic FinTech panel, in that we felt that there was the need for a network within the Islamic finance and fintech space, and really to help protect the UK against losing ground to other jurisdictions such as Dubai, Bahrain and GCC.
And what about Brexit? What impact could that have on the growth of fintech in the Islamic sector here in the UK?
Much like the conventional fintech sector, most Islamic fintechs will probably set up some jurisdictional presence in the EU. We don't think that will have a huge impact. The real question is about where do those companies then tend to scale? Do they scale within the UK, which is their home base, or do they look to scale within the EU?
Whatever happens with Brexit, it seems fintech's here to stay, enjoying firm foundations in Britain's Islamic finance sector.
Well, that's a wrap for this week, and don't forget you can catch all of our episodes online at euronews.com. Before I leave you, here's what caught the attention of the Inspire team on social media. UAE-based property broker Matt from the UK uploaded this pic against Dubai's commercial skyline with the caption, "Happy people sell." And Irfan from Malaysia Instagrammed this shot of him swatting up on Sharia compliance at the Islamic Banking and Finance Institute in Malaysia.